Home prices, we got the monthly report from Case-Shiller, also got a report from FHFA. We also got consumer confidence, which I actually think was probably the most important number of the week outside of course, PCE core. Let's get into it. We also will talk about Resi Club and a very interesting study they did about the last 40 years. Well, folks, let's get into it. Case-Shiller. Case-Shiller, remember this is for March data, I believe. Case-Shiller up 7.4% year on year and up 0.3% month on month. Expectations were for up 7.3, so slightly more than expected. Again, folks, we must remember that Case-Shiller is a lagging indicator. You and I are in the market every day. I would argue the market today on May, I have no idea what day it is. What day is it? May 28th is very different than the historical post from Case-Shiller. But that said, when you and I are doing our work next year, we will be looking at historical information. So Case-Shiller up 7.4%. Certainly not a crash. Again, it's getting really old and tiring saying that. But yes, we were promised a crash. And I would argue that 7.4% up is not a crash. What about FHFA? A little different slice of the data, a little bit more, I would say more complete view of the United States market, where Case-Shiller is very much kind of big city oriented, at least when you look at the top 10 and top 20 reports. FHFA was up 6.5%, 6.5%, so slightly less than Case-Shiller. More importantly, I think, was month on month. Month on month, Case-Shiller was only up 0.1%. Again, I'm sorry, FHFA was up 0.1%. Case-Shiller was up 0.3%. That's interesting because that's a pretty big drop from the month before. The month before was actually up 1.2%. So could we finally start to see the impact of higher rates? Now, again, remember these reports are very much lagging. So we almost have to go in a time machine and ask ourselves what was going on with rates in March and April. As you know, you may remember rates started to tick up. So again, I think what we are seeing is 7% rates matter. This is something that I think is becoming almost indisputable. I think what we are seeing is above 7% restricts buyer's demand, right? Simply said, 7% bad, and sub 7% good. So I think we are going to see that going forward. Could FHFA go negative in the next report? Could Case-Shiller? I don't know. We will see. But again, I think a chance of a crash is very unlikely. Now let's talk about consumer confidence. Folks, this is a big number. This is important. Consumers drive the economy. What is going on with the consumer? Now, again, these numbers are to mean nothing to you. What they are is what is direction are we headed? And what was the expectations? So again, consumer confidence. Prior reading was 97.5. Expectations were for consumers to be less confident. The expectation was 96. So again, 97.5 to 96. What happened? Well, consumer confidence came in at a whopping 102. 102. So again, I would ask you, does that sound like the consumers are pulling back in any major way? We have heard again about last Friday being the TSA most screenings last Friday. We are hearing about consumers certainly trading down, Target to Walmart, McDonald's to eating at home, Nordstrom's to Ross stores. But that said, they're still spending. They're still feeling good. And again, we can't forget what's going on in the stock market. The NASDAQ this morning, I think, just hit another round number. I forget if it was 18,000 or 17,000 or whatever it was. NVIDIA is racing higher again. The Dow has set records, I think, over 40,000 here in the last couple of weeks. So what we are seeing is very likely the wealth effect. If you own assets, folks, damn, getting wealthy is very simple. You have to own assets, and you have to own assets long term. If you are just keeping your head down, doing nothing because you are afraid, that's a recipe to get run over. Guys, these doomers, these fear mongers are trying to prevent you from doing anything while they get paid. They are not good people, in my opinion. They have been preaching fear for 4 years while all of their viewers go farther and farther behind. Now, there's nothing wrong with being conservative. What I have a problem with is not doing the work. Not doing the work. Let's talk about a study from Resi Club. The one and only Lance Lambert I thought was very interesting. He talked about studying the last 40 years. Now, folks, you know, if you follow my channel, we actually go back 54 years. If you want to get your 54-year spreadsheets, real simple. It's free. Go to onerentalatatime.com. I think in the lower right corner, it says 54-year spreadsheet. Go get it. But Lance Lambert did something really cool because he is a data geek. We love Lance. He talked about the last 40 years. How do I want to talk about this? There's so much data. Let's do this one first. Over the last 40 years, so what would that be? 84. How much inflation have we had? You know what? Let's have a fun game. We're gonna have a game. Get your fingers ready. Start tapping numbers. Let's have some guessing games. How much inflation have we had in 40 years? The answer, according to Lance Lambert, is 203%. Inflation's a feature, not a bug. Folks, you got to understand it. One of the paths to getting wealthy is understanding inflation's a feature, not a bug. What about household incomes? Have the middle class, have the U.S. employee been falling farther and farther behind inflation? Well, the answer over a 40-year duration is no. Over a 40-year duration, household income is up 233%. Now, don't get it twisted. That's horrible. That is horrible. That means that income is less than 1% a year for 40 years. No wonder people can't just get by having a job. But now let's have some fun. Now let's get to what you and I care about. Let's talk about the United States first. Again, inflation was up 203%. Incomes were up 233%. Guess how much single-family homes, median single-family homes across the United States are up over 40 years? Just take a wild guess. Just have some fun. Put a number in below. Hint, triple digits. There, I gave you a hint. U.S. average home price appreciation for the country. So we're not talking California or New York or Florida or Texas. We are talking the country. 494%. 494%. So if you're in Memphis or Boise or whatever, there's a chance that your home is up 500% in 40 years. Inflation's a feature, not a bug. Don't forget, the United States is particularly lucky because we also give you the chance to have a one-way bet on rates, aka the 30-year mortgage. Now, this one surprised me. Resi Club Lance Lambert listed what states had the highest appreciation in 40 years. We're going to go bottom up. I got the top 5. I think Lance actually listed the top 10. I only took the top 5. So in the last 40 years, California comes in at 5th place, up 664%. Massachusetts is tied at up 664%. This one surprised me. This was the most shocking data that I saw, and that was Rhode Island. Rhode Island up 668%. Alrighty, folks, now the top two. The top two, and frankly, the top one, it's not even close. Oregon comes in at number 2, up 699%. The number one state for home appreciation in 40 years, Washington State. Washington State up 828%. 828%. I suspect you could thank Microsoft, followed by Amazon, followed by this, followed by that. But yes, folks, Washington State up 828% in 40 years, when inflation is only 203, wages only 233. So again, lots and lots of great stuff going on. Let's talk about an article or a note from Allie Wolf. Allie Wolf is a tremendous analyst and news reporter on new homes. That's her focus, at least in my opinion. Allie Wolf talks about new home prices. New home prices actually might be set up to fall. Now, Allie Wolf is not a doomer. Don't get it wrong. She is not a doomer. What she's telling you is, folks, builders are going to build smaller homes. Also, you are going to see consumers select other markets. If you can't afford to buy where you live, some people will move. Some people will work from home. Some people will commute. Some people will just pick up and move. So again, it is very important to understand that some doomers over the next year or so may be creating content to scare you around new homes. Don't let them. This is how the business cycle works. You can't make money selling McMansions. You go smaller. You build in other markets. Let's talk about what's going on with inventory. Shout out Logan Matashami from Housing Wire for the latest data. Active inventory grew week on week, 16,532. Folks, again, good news. If you and I want a slower housing market, you and I want a healthy housing market, how do we measure that? We measure that by seeing inventory grow. That's what has to happen. So again, last week was a good number at almost, let's call it 16,500. Active current listings, 594,548. So let's call it 600,000. Just so you know, in 2015, we had 1.13. So we're roughly, let's call it half of where we were in 2015. New listings had a good week. New listings up 72,329. Just so you know, again, just for comparison, in 2011, so this goes back a ways, 2011, we had 397,000. Let's call it 400,000. So again, 72,000 is impressive. It is heading in the right direction, but it is not some crazy number that maybe we saw in previous cycles. And then the final thing, price cuts. Price cuts now are above trend. The average, historical average of price cuts is right around 33, 34%, somewhere right in there. We have now ticked up to 35% and appearingly heading higher. Again, folks, good news. Good news. We are seeing price discovery in some once hot markets like Austin or Florida and others. We are still seeing crazy behavior in lots of other parts of the market. But again, we want more inventory. You and I, we want motivated sellers. We want the person that needs to sell, doesn't want to sell. That's where you and I are playing. And then finally, folks, we're going to talk about Neel Kashkari. Who is Neel Kashkari? He is one of those Fed presidents that will be speaking this week. I think we have 7 or 8 Fed speeches this week. Neel Kashkari says we need many more months of positive inflation data before a rate cut. In fact, Neel Kashkari pulled out the card that I've been begging for. Folks, if you watch the channel, you know I've been begging for them to do this. Neel Kashkari says, Fed could potentially hike rates if inflation fails to come down in the near future. We shouldn't rule anything out. Well, Neil, thank you very darn much. Could you go tell Powell to say the same thing, please? At this point, last thing from Neil Kashkari, don't see any reason to hurry on rate cuts. Folks, lots of great stuff going on today. Again, I want to remind you about the tremendous gift that Ty gave you if you are part of the school community. He gave you a 6-hour masterclass on creative financing. There are 5 modules. I recommend you go through a module a day or maybe a module every other day. It's not something I would sit down and consume all at one chunk. On top of that, Ty has been so gracious. He is willing to host a session in about 4 to 6 weeks after all of you have gone through the Creative Finance free course, masterclass, and he will host a Q&A. So again, if you're a part of the school community, go ahead, start going through that creative financing, and then get ready. He talks about sub 2, he talks about the downside, he talks about seller financing, novation, all of that stuff. He's been doing this for 30 plus years. He did his first creative financing deal in the 80s. So again, we appreciate and thank Ty for all that he does for this channel and all that he does for this community. He is constantly giving back. On top of that, folks, I want to let you know that the next opportunity to speak with a millionaire that we bring to you inside of school will be Sunday at 9 a.m. Jason Pritchard had a family emergency, could not make it last week, but he will make it this week. Just so you know, I have asked, I do not have confirmation, but I have asked if his lovely wife, Jennifer, or Jen, as she goes by, could be a part of the conversation. That way we could get a couple that you can speak with. So again, folks, you want to be a part of school, you're going to get the opportunity to ask questions. I strongly suggest you join now. These calls with millionaires are only averaging 10 plus people. So your questions will get answered. You will have the opportunity to go deep on what you care about. Because we keep adding value, this will grow, and it will grow likely quickly. Get in now. Also, remember, once we get to 100, we are going to start to hold back some of our millionaire conversations. So I produce or post 1 less video a day on YouTube, and I give you access on school. We will go ahead and make sure that your $20, that's all it is, your $20 a month is well worth it. I always want to exceed your expectations in every way possible. But don't worry, we're going to keep showing up the daily financial news. We'll be here live 7:30, 5 days a week. We will continue to post multiple videos a day. But yes, school is important to me. It is a way that I can merge all of my growing contacts with this wonderful community and allow you to ask questions that you care about. Yesterday, we had the opportunity to talk with Omar about how baby boomers and Gen X need to get started on creating content around their passion. That was a lot of fun and a great conversation. Folks, I hope to see you inside school. I'll put the link below. Take care. Have a wonderful day. Bye.